With Tesla's recent volatility, Wall Street is beginning to get a bit concerned. Now, two analysts are expecting a decline in sales, with Alexander Potter of Piper Sandler expecting deliveries to slip 0.5% to just shy of 1.8 million vehicles, while Philippe Houchois of Jefferies foresees... Thanks, I tried. Foresees roughly a 3% drop to 1.77 million. Both analysts also cut their price targets to $205 and $165 respectively here. So a little bit more bearishness entering the chat here on Tesla right now.
Yeah, not exactly a huge surprise. We know Tesla has been a massive underperformer, to say the least, since the start of the year. The worst performer within the S&P. We have certainly seen an entire shift just in terms of how investors view this stock and how they have viewed the stock over the last several weeks. And some of the criticisms surrounding Musk, at least most recently, about what he was saying for robo-taxi and what that's going to do with Tesla, is that's just a sideshow. He's doing everything he can. It's part of the playbook that we've seen before, trying to distract investors from some of the concerning trends that we are seeing in terms of sales and the decline in sales that we could potentially see here in the coming quarters. And he's trying to shift that focus to that next new shiny object, and this could be robo-taxi. It was interesting what Jefferies had to say about robo-taxi, because they did acknowledge that, yes, it is helping sentiment, but they do have some doubts surrounding robo-taxi and fundamentally what it's going to do to the investment story, at least in the near term. And then you compare that to what we heard from Piper Sandler. You have quite the look on your face.
I mean, this is just April to forget for Tesla.
It
started off with
2024 to forget for Tesla.
Yeah, that's true too. Wells Fargo, they started things off. They saw moderating delivery growth driven by lower demand, diminished return on price cuts, estimating the auto gross margin excluding credits would fall by 130 basis points year over year in Q1. So yeah, this is not a good year so far.
That's true. Maybe Tesla is slowing down, but the whole auto industry has slowed down. I've noticed in the last year or two, particularly in the U.S. So yeah.
And in terms of Tesla's own breakneck growth, is that over? Some say perhaps, it's done and dusted.
Looking at one small downturn, maybe it's over, maybe it's not. I think in some ways it doesn't really matter, because the EV phenomenon has taken over the entire auto industry. We'll see EVs coming out of China here like crazy in the next several years. The Korean EVs are amazing, and even in the US, there's many companies making EVs still.
So the current growth pace is going to be the new normal?
I think that eventually we're going to see all of the cars replaced with EVs over the years. And who the players will be, not everybody will survive. I think Tesla probably will.
Do you buy the spin that perhaps Tesla is in between two growth waves?
Maybe that's the way to look at it. I read recently that Tesla has decided not to pursue their Model 2, the low-end car, because they don't think that they can compete with the low-end Chinese cars. I think it's a shame. They might want to rethink that. It seems like a better market than that gigantic truck they make.
Why do you think Tesla is so reluctant now? I mean, and why has it been so difficult and so slow to get to the cheaper versions of those EVs?
It's a new technology, and it's difficult to drive the technology price down. The profit of high-end luxury cars is much higher, and it's easy to make money in that space. But when you want to move down into lower price markets, you need to have the ability to build at a very different level.
So where is Tesla going wrong, or where should Tesla be focusing on to get to where it needs to get to in terms of those cheaper models?
Tesla needs to be focused on cost. Tesla needs to be focused on cost instead of focusing on technology for the sake of technology.
Tesla's recent market performance reflects a broader sentiment shift, and investors who are accustomed to Tesla's high-flying growth narrative are now forced to navigate through a phase of recalibrated expectations and heightened uncertainty. Right now, things are not going so smoothly for Tesla, and it takes some extra bullishness to still be holding on to Tesla stock. Even Ives, who has been bullish on Tesla for a very long time, recently wrote in a Wedbush note that he would reduce his $300 price target for Tesla stock if Elon Musk doesn't adequately address the demand problem Tesla is having during the April 23 conference call. Ives isn't exactly a believer in the robotaxi story, but he remains bullish on the company's impressive FSD software, and believes that it should prioritize getting an affordable EV out there instead of robotaxis, saying that Tesla doing this will drive demand for its EVs on a global scale. He also estimates that approximately 60% of future growth in the coming years will come from the Model 2, which could hit the road in late 2025 or early 2026. Ives saying that isn't good for Tesla stock, as you'd expect, and many are wondering what's next for the company as we approach the dates for the conference call and earnings release. However, in the midst of all of this turbulence, Tesla just had a moment of boom, and surprisingly it's coming from a Tesla bear. That's what we're going to talk about now. But before we do that, if you want to keep up with Tesla's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
We almost front-run this with the stock move. The beginning of this year, we've seen Tesla significantly underperform, and now that's starting to be borne out in delivery numbers. Who thinks that this sort of decline is going to be continuing?
Yeah, I mean, this idea that Ben Callow at Robert W. Baird, as you mentioned, expects the second quarter to be another decline. I think, just looking at the chart we have on the terminal with that story, it does speak to this idea that there will be, at least in his estimation, a bit of a tick up in terms of, just from the seasonally low first quarter. But to his point, the comparison from a year ago is tougher. And I think, as you mentioned, just early this year, the stock was underperforming because we kept hearing analysts after analysts, talk about this idea that the outlook for sales, wasn't that great. And then, lo and behold, the company comes in way below analyst expectations. I think this really sort of leads people to second guess, their assumptions for this company through the rest of the year.
Let's just talk a little. There's a great street wrap. Bloomberg does a wonderful job of summarizing what all the analysts out there are saying. And many have been wanting to talk about this robo-taxi focus versus perhaps the concern of no longer having a model to a cheap car. What do you make of some of the views on the robo-taxi?
I think their skepticism is sort of borne out just from the year after year pattern of Musk talking about robo-taxis being just around the corner. I think we're actually coming up on the 5-year anniversary of Musk holding the first Tesla Autonomy Day. When I remember, covering this with Dana Hull and watching Musk talk about this idea that, by the middle of 2020, he was saying that, the million Teslas that were on the road were going to be capable of turning into robo-taxis, and that people would be able to even fall asleep in their car. Obviously, that has not come to pass. And so, the expectation that Tesla is going to be able to deliver a fully self-driving vehicle, I think Wall Street's going to need to have some show there.
Companies, just not Tesla, for more than a year running.
That's right. We still have a buy. And, coming into this year, the setup was the stock had more than doubled last year. And so, given the historic volatility of Tesla shares, a pullback of the magnitude of 20, 30% or even more, which is what's happened so far this year with the stock, is not out of the realm of what we've seen over the last several years. And so that's what's happened. Our primary concern in the near term is that the Cybertruck ramp up has been very slow since they made first deliveries back in November. Based on the disclosure Tesla provided last week regarding their Q1 production and sales, as far as we can tell, they only produced a few thousand Cybertrucks in Q1. And so, so we've taken our numbers down significantly for 2024, as have other analysts. And 2024 now sort of looks like a wash year, and more meaningful earnings growth is going to have to wait till next year and in 2026. And so, so we think a lot of these the headwinds are discounted in the current share price, and so we've lowered our price target, but we're at a $220 price target for 12 months, and we remain at a buy.
All right. Hey, real quick, Garrett, the robo-taxi, August, think that's going to be a big unveil?
We do. It's a chance for Tesla to highlight a lot of the innovation and progress that they've made in all the R&D dollars they spend quarter after quarter, on AI and the progress that they've made. So we are bullish, and we do think that they will eventually roll out a lower price mass market EV, which is going to be a big catalyst for their volumes.
Tech entrepreneur Dan O'Dowd has been waging a campaign to stop Tesla's self-driving software in its tracks. And according to him, the deployment of this software is reckless and the cars are not safe. O'Dowd's campaign, called the Dawn Project, has conducted several tests on Tesla cars using FSD. He has previously said that FSD was terrible, adding that there are better companies to buy self-driving cars from than Tesla. He also said that the software is the worst in terms of reliability that he's ever seen, claiming he has never seen a product that has this many failures. In a previous video, shot in October last year, the tech entrepreneur alleged that Tesla's FSD software failed to recognize a pram placed on its path, causing the car to repeatedly hit it and run over the small mannequin placed inside. Basically, O'Dowd considers Tesla's software rollout premature, stating that the car company does not do the kind of testing that is needed for something that's going to really be reliable. He even mentioned that Tesla makes too many changes too quickly without enough thought on the issues affecting the whole system. However, something interesting recently happened, an attempted drag on Tesla's FSD which turned out to be hugely in its favor. Let's dive right into what that is. Hello everyone, and welcome back to Investocracy. O'Dowd recently launched a Twitter ad asking the platform users to encourage Tesla owners to try the automaker's 1-month free trial of the FSD. Some weeks ago, Elon Musk announced a free trial of Tesla's FSD software for car users, and this was done in order to encourage Tesla owners to try out the automaker's autonomous driving software. According to O'Dowd, his ad was actually to help everyone learn the truth about FSD. However, what happened next was definitely shocking. O'Dowd's ad, which was meant to downplay Tesla's FSD efforts, actually turned out to be in the company's favor. In fact, Tesla was able to get more people on its FSD software, as the ad reached more than 1 million people. Interestingly, this is not the first time that the Dawn Project has aired a campaign against the use of Tesla FSD. It's actually been doing so for years now. The safety advocacy group had previously aired 2 ads that criticized Tesla's advanced driver assistance software during the 58th Super Bowl in 7 U.S. states, a move that cost around $552,000. When it comes to Tesla's FSD, it feels like everyone has an opinion, but honestly, a lot of people are still scratching their heads about what's going on. 1 minute, you hear analysts freaking out because FSD almost turned left into oncoming traffic, and the next, you see articles claiming it's about to revolutionize transportation. So, what's the deal? And what actually is the truth about Tesla's FSD? Keep watching to find out. But before we continue, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. That said, back to the video. The thing is, FSD is a bit complicated because Tesla's approach is different from other companies. Tesla is using cameras and a ton of data to train a giant AI system rather than relying on laser sensors or lidars and pre-programmed maps. Tesla's approach is extremely ambitious, so it naturally demands a lot of time to be perfect. Still, FSD is definitely making progress. Recent updates have been incorporated and Tesla owners are showing off the car navigating city streets with surprising smoothness. However, it's still early days. So what we can say is that this is going to be a wild ride, but hopefully the final product will be something truly amazing.
Let's talk Tesla, Jeff. Been a interesting, I don't want to call it a comeback, but outperformance the past week. I mean, literally like the last 5 days, Tesla shares have been one of the strongest mega cap names. But it seems like generally the pessimism still kind of lingers in the analyst community as we've got some cuts to expectations today.
Yeah, we've got Piper Sandler lowering the price target to 205 from 225, kept an overweight rating on the shares. The firm said they're also cutting their estimates to reflect weaker than expected Q1 deliveries, as well as a challenging demand outlook for 2024-2025. They also updated their proprietary forecast for full self-driving software. Tesla is now the firm's lowest conviction overweight rated stock over the next year, and its 1-year price target of 205 reflects that. Piper still thinks Tesla warrants a place in clients' portfolios, especially for growth-oriented investors. Jeffries, similar note here, lowered price target to 165 from 185, kept a hold rating on the share, said those Q1 results and questions about product priorities and leadership have caused them to reduce their fiscal EBIT and EPS estimates by about 30% to $6.5 billion and $1.87 respectively. The firm says Q1 cash burn should be heavily negative, as it adds that they should not be enough to doubt Tesla's ability to fund their venture and support current multiples.
All right. Ouch. That's pretty, kind of jugular analysis there when you're talking about financing, and that the valuation's still too high at where it's at. I mean, still on the long term, the worst performer in the mega cap group. So to hear that the valuation's too high.
The future of cars, car ownership, and transportation, led by Tesla, promises to be a transformative journey. This shift towards ultra-durable electric cars, robotaxi services, and specialized vehicles will revolutionize how we travel, transforming our daily transport and reducing the need for personal car ownership. In order to promote its FSD plans more, Tesla recently cut the price of its FSD subscription to $99 per month, down from $199 per month. This would definitely help Tesla and Tesla stock, because according to Wall Street estimates, roughly 400,000 Tesla owners in the US use FSD, even though there are around 2.5 million Tesla vehicles on US roads. This means that many Tesla owners probably think FSD is too expensive, so a price cut might help get more people into it. The free trial could also encourage a lot of people to sign up for FSD. If Tesla can get some 20% of trial users to sign up, it will be a net positive. But the company must get at least another 400,000 customers to sign up for the service and offset the other 400,000 people who paid the higher monthly price. Tesla's stock trajectory in recent times has been nothing short of a roller coaster, marked by significant fluctuations that have caught the attention of the market. This is largely because Tesla's stock price is heavily intertwined with growth and optimism, and failure to meet expectations sends ripples of uncertainty, prompting investors to reassess their positions. Although some acknowledge Tesla's past successes and view the current phase as a temporary setback with long-term benefits, others are cautious and worry of a prolonged period of stagnation or decline in stock performance. So, maybe Tesla stock's movement in the coming months will likely reflect a tug-of-war between these sentiments, with significant volatility as the bulls and bears jostle for dominance. However, in all of this, it is important to know that Tesla's broader vision extends beyond just cars. The company's foray into AI, robotics, and self-driving technology presents additional avenues for growth. While these segments are currently overshadowed by the automotive division, their potential impact on Tesla's long-term performance is substantial, and as these technologies mature, they could become significant contributors to Tesla's revenue and innovation footprint. The car company is setting the stage for a future where it not only leads in high-end electric vehicles, but also dominates the mass market. So just maybe this period of change is a stepping stone toward a more diversified and resilient Tesla. But what do you think about Tesla's FSD? Let us know your thoughts in the comment section. If you would like to know what Tesla has been up to these past few days, then go ahead and click on the next video on your screen. See you there.